Most people that you ask think that the only way that you make money or gains in the stock market is when the stock goes up. And the thing is, that cannot be further from the truth. Today, I'm going to share with you guys a strategy where it allows you to collect premium from the stock market, whether it goes up, down, or sideways. Let me show you. Yo, what is going on, Premium Chasers? I hope you are having a God-blessed day today. Every single person that comments down below is going to get my ebook that lists the biggest mistakes option sellers can make. You definitely want to avoid these if you are a beginner. Just drop a comment down below. I'll personally respond to you with that full list. And while you're down there, if I provide any value for you, please hit that like button and that subscribe button. But guys, today we're going to be talking about how you can collect a premium from the stock market, whether it goes up, down, or sideways. Most people that I speak with, right, they will simply, buy stocks. Literally, I was just golfing with a buddy yesterday, and I was like, he's like, yeah, I buy stocks and I just hold them. And I'm like, okay, that's fantastic. But like, even so, when we look at like SoFi, even if you hold it a year, right? Yeah, SoFi obviously has been on a tear, right? If you held one share of $7, right, now it's trading around $20, right? And that's fantastic. That's a fantastic gain. But if we look at like other companies, right, like an American Airlines, when we look over the past year, like, did we really do anything? We're kind of trading right around the same exact price, right? Now, this is where I believe selling options, and I know you hear options, it immediately terrible experiences. Trust me, I have as well. This is where I believe selling options is better than buying and holding. That's just my belief. You don't have to believe that. I do believe in a buy and hold portfolio, right? If for me, I buy Vanguard funds. I don't pick and choose my own individual stocks. I've lost way too much money that way. The only thing I do on individual companies now is I sell options on them. And I'm going to show you exactly what I'm talking about right now. And now for this example, we'll just use SoFi, okay? Now, the number one prerequisite, guys, is you got to do this you just don't do this on companies you don't mind actually having to end up holding. And you're going to see that is the biggest risk of this strategy, okay? Because all strategies have risk, and this is the biggest one, right? So just make sure, like, don't go into as you go progress in your own journey in option selling, or you're hearing about the first time, fantastic. Just listen, there's a lot of noise out there. There's a lot of hyped up stuff where you can make insane premiums, and I just warn you, right? Be careful. Just be careful out there. I've been burned a lot. A lot of people have been burned a lot. And I just would hate for that to happen to you. So if you focus on good quality companies that you actually believe in, I believe you can't go wrong, okay? And at least for me, that's what I do, okay? So, for example, let's say you wanted to buy SoFi, right? Like most people, they'll open up their Robinhood app, they'll open up their Fidelity app, and they'll just buy 100 shares, right? They'll just go out there and spend $2,300 to buy them. Well, what we can actually do is we can say in a month from now, or a week from now, maybe in a couple days from now, if it hits 22, we'll buy it. Interesting. Now, for that risk of us saying that, we're actually going to collect premium up front. Let's just show you real quick. I'm going to go to the trade options section. We're not a cellular options buyer no more. We're clicking sell. We're clicking put, right? We're clicking sell, put, and our expiration date is where we select, right? That at that close, right? On close on that date, if the stock is trading at the price that you chose, you are going to have to buy 100 shares. Now, one contract equals 100 shares. I don't make the rules. That's just the way it is, guys. I wish I could change it, but that's just the way it is. So if I go, let's say 9 days away from the time of me recording this, right? And I just selected and I'd want to buy it for $22, right? I would collect $30 of premium. Now, full disclosure, results vary. These numbers are constantly changing when the market's open. This is literally what I'm seeing at the time of me recording this video. These premiums are always different. The prices of SoFi are probably completely different. But I'm collecting $30 of this money. Now, here's the big kicker here, guys, right? Now, your brokerage agent is going to say, okay, Pete, here's $30 from an options buyer, man. But they're going to lock up some money, guys. They're going to lock up $2,200 of mine. Why are they locking up $2,200? Well, because 22 times 100 is 2,200. Let's go. We got that easy math. Even I can do it, right? So $2,200 will be locked up of your capital. This strategy, the reality of the situation, guys, is it takes money to make money. Like, this is a strategy I plan to use very heavily in my retirement years to create an active income for myself. I kind of like to look at this as like a paycheck in a sense when I run this strategy on a weekly basis. So I collect this $30 and I lock up $2,200. Now I have a cash secured put calculator here. Everything here is free, guys. It's in our Facebook group. You can join us. The link will be in the description. But I'm collecting $2,200 or collecting $22, and I'm locking up $2,200. Okay, or sorry, $30 we're collecting. Just that $30, 3 cents off. Right, and we have about a 1.36% return. Again, results vary. Premium divided by the collateral. Okay, premium divided by the collateral. That is how that number is being reached. Okay, so let's talk about the risks because they are important to understand what those risks are. I can't stress it enough. Education in this space is critical. Okay. Number one, let's say in 9 days from now at close, SoFi is trading sideways or it's went up. It's trading at like $30, right? Whatever. It's above $22. Your contract would expire worthless. This money that you got locked up for those 9 days, it's returned back to you. It's no longer collateralized, and you can go run the play on another opportunity and collect some more of the juicy premium. I know some of you just absolutely love when I say it. Are you like, I'm going to rip out the damn juice. I haven't whipped this thing out in a while. I have to hide this from my kids, the juice button, but we're bringing it back for today's video. All right, those silly little options buyers. All right, so that's the first thing that can happen. We collected that premium up front, and you know what? Fantastic. In 9 days, if it's trading above that price that we were willing to buy it for, cool. We walk away with the premium. Our money gets returned to us, and we can run the play on a different opportunity. Second thing that can happen. This is the big risk, guys. This is the big risk. Can't stress it enough. Is if at close in 9 days from now, SoFi is trading at $20, you are buying at 22. Okay? That's a risk. You got to make sure you're comfortable owning the stock at the strike you chose. That's the number one rule. Like, look, we dive into all the technicals and all that stuff. And actually, I have a new class. Actually, guys, it's 30 minutes long. First link in the description. Watch it. I dive into some basic technical analysis, Greek stuff, and just diving more into this strategy. I call this the Ark Options Strategy. Click that first link in the description. It will kind of dive into this way more on like what strikes to pick and like basic technical analysis stuff. So, but with that said, you got to, at the end of the day, you got to be comfortable buying the stock at the price you said you were going to buy it for. So let me show you guys a live example of some of my trades that I have going on right now. So I have a public portfolio here on the channel, right? And I have 3 positions opened right now. Okay. I have one for Fiverr, I have one for Snap, and 2 for Snapchat. Okay. So what am I saying here? Well, what I'm saying here is on September 19th, if Fiverr is trading at $20 at close, I am okay buying it for $20. I only have one contract here. Okay. Now, if it's trading at 19 on the 19th, that's probably some bad luck right there, fam. No, but no, seriously, I'm buying it for 20. I'm assigned at $20. Think of this as selling insurance, essentially, on shares. That's how you can look at it that way. Snapchat, I have a 750 expiring in a few days. Probably by the time you're watching this, this has already happened, right? So August 22nd, let's say Snapchat's trading at $6. I'm buying at $750. But if it's trading above $750, I'm not buying it. And then I have another Snapchat put here for September 12th, right? For $7, right? Now, every brokerage is a little bit different, right? But at the end of the day, it's the same terminology. You're going to see it across the board, right? You're selling puts, right? Selling a put, selling a cash secured put, right? Everything we do is cash secured. I don't do like naked puts or anything of that stuff. That is absolutely degeneracy. I try to keep things at least simple for me without micromanaging this stuff, right? Now, let's talk about management for briefly, because one thing about this strategy, guys, is that you can be like beginner level, and there's nothing wrong being beginner level, right? And just letting everything go to expiration, right? Like September 9th, it just goes, right? It just goes, and then I see what happens. Whatever happens, happens. I open my phone, cool. If I'm assigned, cool. If I'm not assigned, okay. Okay, and that, even if you get assigned, it's awesome because then we could sell the shares right back for a higher price than we bought for. Just click the link in the first link in the description. It's 30 minutes long. You can watch it on 2x speed, but you can close your positions early. okay? Meaning that you give back a little bit of the premium. So let me show you a live example, right? So I'm here in my orders, right? And you could see right here that I bought to close American Airlines puts, all right? And I paid $6 to close those position. It's kind of complicated when you look at it here on your screen, but let me show you in our trade log, right? So right here, this is I basically document every time I make any kind of trade. So these are our active trades right here that are in the works. And then all these color codes are just how I need to see things because I'm colorblind. Boo-hoo. So you can see here, I had an $11 put on expiring on the 22nd. Well, guess what? It's like over 10 days before the 22nd. And yesterday I closed this position early. I closed it early. I collected $42 of premium for 2 contracts. I gave back $6 to free up my collateral in just over 10 days. I think it was 11 days. I closed 11 days early. I got my money back. I got my $2,200 back to then go and deploy somewhere else. I didn't deploy it fully somewhere else, but I used some of that money from my $5,000 portfolio, right? I have a little bit of money still left here from the $3,400. I have about $1,500 here. I can still go deploy somewhere. Either way, I'm still earning interest. But right here, right, I took $700 of that $2,200, and then I did my $7 put on Snapchat. And that's how I know if I'm like kind of diving into this a little bit, it kind of sounds a little bit intimidating and complicated. This is why education is so key. Dive into the channel. There's so much information out there. Like you can do this like for 100%. Like you can, like it just take your time, right? Educate yourself on this stuff. I can't stress it enough because the last thing I want to see you do is like accidentally go and buy a put or buy a call. And next thing you know, like you're losing money. This system, this strategy, I believe it fits everyday life. It fits my life, right? Like I work, I have business, I want to take care of my faith, my family, my fitness. I have other priorities in my life over trading. I have actually a massive list of priorities above trading. I don't even consider myself a trader. I would never introduce, I'm more of like a short-term investor in a way, because think about it. I just did my put, right? I'm not doing much. Like once a day, I'll log into my phone for like 10, 15 minutes and I'll be like, okay, cool. Can I close out early? No. Okay, problem. No problem. Oh, did I get a sign? Did I do this? Did I do that? No. Okay, boom. I move on with my life, right? So I believe this strategy can fit into people's lives. Like I believe everybody, and that's why I started this channel. Is like I genuinely want to just tell people about this because every time I talk to people in my everyday life, like they get so excited about it and they start doing it and they absolutely love it, right? So I want the same for you to at least go out there and explore it at least for yourself. And if you want to learn more hands-on with this and have a more hands-on approach with mentorship and an amazing mastermind, click the first link in the description of today's video. There's a 30-minute class there that dives into our Ark Options strategy in way more depth. And if you like what you hear, maybe you'll be able to come join us inside of our private mastermind group. It's a non-toxic environment for financially stable individuals. We speak to everybody we bring in here because, again, the vibe is cool there, and we just want to make sure everyone's on the same page. But either way, everything's still free here on the channel. So go ahead and click that first link in the description of today's video, guys. Remember, sell options, collect premiums, repeat. And I'll see y'all tomorrow.